Not a bad day when it came to the benchmark indices, given that we were below 5,200 for most part of the day. We did manage to see quite a bit of strength on account of the way the global markets panned out. So just about quiet for the benchmark indices. Broader markets too, which were deep in the red for most part of the session, ended on a very somber note. Let's pull up the sectoral movers. Auto was playing spoilsport for today, as was the entire metal sector. On the gaining side, though, you had the IT index as well as oil and gas, which spurted up in the green. To some of the index losers, then, it was the entire metals basket which really lost its sheen. So Jindal Steel and Power, Sterlite Industries. You also had IDFC and high beta in the form of Jayaprakash Associates, which weighed down. Lots of results came out today. We'll walk you through some of the important ones. Marico, for one, came out with a good set of numbers, though it was profit booking for the stock by the end of the day. Profits came in at 124 crore rupees, vis-a-vis a figure of 85 crores. There was also considerable sales growth, 1,267 crore rupees, with the EBITDA margin also expanding to 14.7% versus 12.1%. Sun TV numbers in line with expectations. The profits came in at 164 crore rupees, that's down 12%, with the sales at 426 crores. EBITDA margin, though, came in a little softer than what we had expected at 75.6%. But let's hear out the Group CFO of the company, Mr. S.L. Narayan, on the way forward for the company.
Our advertising revenues are up by 5% year on year. This reverses the adverse trend till recently. So that growth, even if it is modest, signifies kind of a revival in ad spends. On a sequential basis also, we have grown by about 3% plus. So that, in my mind, has got far greater impact on the fortunes of Sun TV than anything else.
Okay, moving away from that, in the banking space, United Bank, the street gave that counter a big thumbs up after its profits shot up 31% to come in at 173.9 crore rupees. Net interest income too surprised on the upside, higher by 20% at 683 crores, with their gross NPAs marginally higher at 3.47% versus 3.41%, and the net NPAs at 1.77 versus 1.72 on a sequential basis. Bharat Bijli, a big disappointment there. They clocked in a loss of 2.4 crore rupees. This coming in versus a figure of a profit of 27.5 crores on a yearly basis, with the net sales also down by close to 8% at 103 crores. ICRA put out a fairly decent set of numbers. Profits were higher by a good 133% at 8.4 crore rupees, and the top line also grew by 31%, 50.8 crores versus 38.7. The street also rewarding that counter. But it was Jet Airways, and after 5 straight quarters of quarterly losses, the company reported a net profit of 24.7 crore rupees. Sales also saw good growth, 30% is what they notched up at 4,587 crores. Let's take it straight to Megha Memoria, who now joins in with a detailed report on the numbers. Megha.
It's a decent quarter for Jet Airways, not a great one if you compare it with SpiceJet there, but the airlines has managed to turn profitable after 5 consecutive quarters of losses coming in. If you look at the numbers there, sales have increased by close to 30%, being driven by passenger fare hikes taken by the airline and higher passenger volumes being enjoyed after Kingfisher curtailed its operation to a significant level there. But on the operating cost front, not a great picture there. The fuel cost as a percentage of revenue has just declined by 1% on a year-on-year basis. Operating costs still remain high as they had to pay higher airport charges at the T3 airport in the Delhi airport there. So that was a bit of a dampener for Jet Airways there. Also, this quarter's results include an other income of close to 124 crores, of which 52 crores comes from the sale and lease back of aircrafts. They also have a forex loss of 69 crores. So if you look at these adjustments there at the profit level, it's not a great set of number, but still the airline has managed to stay in the green.
Thanks very much, Megha, for giving us those details. So the company has managed to stay in the green, but a decent set of numbers. But even as both of these companies, Jet Airways as well as SpiceJet, surprised the markets with their first quarter performance, aviation honchos have warned that this is not going to be sustainable. For one, SpiceJet CEO Neil Mills said that the company is facing bureaucratic hurdles when it comes to directly importing ATF, despite the government's nod.
Airfares ultimately will have to support the underlying costs. So what we were doing in the last 12 months was that ultimately the entire industry was subsidizing the passengers because we all made losses, which means indirectly we were all funding every passenger that flew. That's not sustainable. So ultimately the increased cost burdens that are coming from airports, from fuel, from taxation, will have to be passed on to the consumer. It's a challenging environment for everybody, but I think it's probably going too far to say it's hostile, because the other side of it is it's still a growing market where GDP is still positive. In other parts of the world, GDP is negative. That will be a lot more hostile of environments, because if you can't get passengers to fly, no matter what your cost base is, there's going to be a problem. On the ATF imports, we haven't started it yet, so everything is lined up from a logistics and physical imports point of view. We've hit one bureaucratic issue, so we'll deal with that, which hopefully should be done in the short term, and we will still be doing the direct import this quarter. But bureaucracy in this environment is a part of life, so we just have to deal with it and move on.
Okay, so a bit dodgy still when it comes to the aviation sector. Meantime, some of the stocks in news, and it was all of the result reactions. Berger Paints shot up a good 6%. Profits came in at 44 crore rupees with the net sales at 803 crores, and volumes also 11.5 times the 2-week average. Mahindra Satyam put out a good set of numbers. Although the profit was down 34% sequentially, it was the revenue at 1,880 crores, higher by 13% on a quarterly basis, which really cheered the street, as well as good margin improvement. Glenmark, which came out with its results yesterday, the sales were higher by 10% at 1,040 crore rupees. Profits, though, were down 62%, but Credit Suisse came out with an outperform report on the counter with an upside target of 430. Oracle Financial Solutions, also that counter hit a new high in today's session. It also soared close to 6% as the profits came in higher at 80% at 36 crore rupees, with the top line growing 40%. The entire sugar basket also was very active in today's session. Balrampur Chini, Bajaj Hindustan, as well as Sri Renuka Sugars spurted on the price as well as the volume charts. All in all, for today, we did manage to see quite a bit of retracement from the day's low and ended close to the high point above 5,200. What about the F&O activity? How did that pan out? Navneet Saluja is here with the latest. Navneet.
Hi Avan, quite a volatile session, but we managed to close at least at the high point of the day. If you look at the Nifty July futures, they did slip below the 5,200 mark, but they managed to close just at about 5,240, which is about 11 points premium to the spot Nifty, and they witnessed build-up of close to 8 lakh shares in today's trading session. On the option side, the most active strikes during the day were 5,300 call and 5,200 put. So you had Nifty trading in the range of 5,250 to 5,300 in today's trading session, and you also had the Nifty PCR, which inched upwards towards the last hour of trading session at about 1.10. So you saw a lot of put writing towards the end. You had strike 5,000, which added close to 12 lakh shares. You also had 5,100 and 5,300 put strikes, which added over 4 lakh shares. On the call side, we saw significant amount of open interest addition at 5,300 strike, which added about 10 lakh shares. Also 5,400, which added just about over 6 lakh shares. On the stock futures front, among the Nifty gainers, you had Asian Paints and NTPC, which gained the most. So fresh long positions were seen, and it was the metals counter which underperformed in today's trading session. So you had counters like Tata Steel, Sterlite, Jindal Steel and Power, which were under pressure. Fresh shorts was being built up there. From the mid-cap space, you had Pantaloons and Escomar, which were down and about in today's trading session. So you had fresh shorts being built up there. OFS's shot up almost close to 6% on back of good set of numbers. Fresh longs were seen there, and you also had the sugar pack, Renuka and Balrampur Chini, which shot in today's trading session. So fresh longs seen there in sugar pack as well. Among the open interest gainers, you had counters like Colgate, On Mobile and Bata, where a good amount of open interest addition was seen. So do watch out for all these counters on Monday opening as well. And participation volumes were back on track. We did about over 1 lakh crore, which was way above yesterday's volume of about 55,000 crore on NSE.
Much Navneet for giving us all the details in the F&O space. As she pointed out, some of the top index gainers then came in the form of an Asian Paints as well as a Wipro. So they did very well for themselves in today's session. Market support also coming in from NTPC for the second day on the trot, and ONGC gained up close to 1.5%. How did we pan out for the week given all of the heavy news flow, not just globally, not just domestically, but globally as well? Well, for the week, the Sensex was higher by close to 2%. The Nifty too seeing a similar kind of traction, gaining close to 2.3%. But once again, it was outperformance when it came to the broader market. So if we pull up the 5-day chart of the mid-cap index, this week it's gained close to 3%, and the small-cap index too, they're giving it quite a bit of company. But what are the market men saying? Let's get you some of the top trading bets. Rajat Rajgaria, Director of Research at Motilal Oswal Securities, sees a diversion between consumer staples and discretionary stocks, and Prakash Diwan likes stocks like Yes Bank, DCB and IndusInd Bank.
During this last 2 months, we have seen a complete divergence between consumer discretionary and consumer staple. So while a company like a Lever or an ITC is still doing well, which form part of staple, a discretionary like a two-wheeler, Asian Paints, Jubilant, Titan, they are seeing the pinch of the slowdown. So I guess you may see some more months of slowdown.
Most of the private sector banks are the ones that would be center stage going forward. And within that also, the new age private sector banks like Yes Bank, DCB, IndusInd, these would definitely feature more prominently.
Okay, those are some of the stock picking ideas from our experts. But